traders, welcome out to your currency midweek for December 28th. Hope you all had a very Merry Christmas or excited about the new year. Whenever the new year comes, there's always major changes in kind of investment and trading outlooks and things like that. The calendar refreshes. It kind of changes things in terms of investor sentiment and behaviors oftentimes because people might be constrained, not willing to sell and take tax gains or something like that in the end of the year, but they might want to do something, maybe even rebuy something they sold for tax reasons, whatever that may be. So the calendar flipping becomes kind of an important time for markets, for risk taking, for a lot of different things. So we'll kind of make sense of that together. As always, a quick reminder to make sure that you follow your trading plan. So this week, well, there's just not anything happening. I mean, you look at the economic reports, it's Christmas holiday. There's nothing out there. We are on holiday for most of this week. As we look at the calendar of events coming up, there's just nothing really out there. So, you'll get initial jobless claims or whatever tomorrow, but it's just, we're kind of coasting into year end. It's going to be kind of choppy. But again, the calendar flipping over is really the big event. That's where volatility should ramp back up. That's where trading opportunities really reemerge. We kind of talked about this last time we met that, well, markets are going to go on holiday a little bit. Don't expect too much. There will be choppiness. They'll try to, take advantage of low liquidity, things like that. But it's behavioral that's difficult. So there's not much to add. No major changes. My outlook is still that you look at the Japanese yen, and there was a major change earlier this year. And then that change in the chart was followed up, as expected, by a major shift from the Bank of Japan. And that really changed things on the yen's outlook. The dollar still just bouncing around and choppy at that 104 level. So nothing really has changed from that front. As we look at this week, a little bit more selling as we go into the end of the year. The quote-unquote Santa Claus rally, that period of time, is the week after Christmas. So this should be the period where stocks should rally theoretically based off of that, Santa Claus. But that's usually in an up market. What happens is if the markets have been up for the year, people don't want to sell. They don't want a tax burden. When markets have been down, they do want to sell because you can use a loss on your taxes. So there's more, if we just look at taxation, there's kind of more reason to sell and take that capital loss and be able to use that for tax purposes. Now, you do have to wait. If you sell something, if you sell a stock, you have to wait 30 days before you can buy it back. That's what they call the wash sale rule. So if you sell it and then you rebuy it the next day, well, it just picks up your cost basis from there and you don't get to use that loss. It's just like you restarted your position. You only get to use the loss once you've sold and don't repurchase for 30 days. So again, there's more reasons to sell, but people may want to pick up those things they were selling at the end of the year, the first part of next year, and we'll touch on that a little bit further. So as we look at things and kind of the transition of the markets, we've highlighted this downtrend line, and it's really the key area for the markets, but I've made a little bit of a shift, and my outlook kind of changed right in here. Now, we haven't done anything. We're just going sideways since my outlook shifted a little bit, but I was really of the mindset that we would, come up, fail at the downtrend line, head back, and probably make new lows. There's a few different reasons that I now think we actually are going to go up and through this downtrend line first. Do I think we'll ultimately come back down and retest these lows and probably go even lower? Yes. I think that this is going to be a long, drawn-out process. If you look at the data that's coming in, the data is fairly strong in the U.S. I mean, we're not seeing a massive slowdown. We're not collapsing in economics or anything like that. And it makes sense to me, based on what we're seeing, that this shift from, we just got too reliant on QE, on money printing, on the Fed fueling the upside. And interest rates were, down at low levels, so it was so easy to borrow and didn't cost much and so on. And it just fueled too much. And what I think that did is it stole away future returns. If something bubbles up, then it's not even that it always collapses back down. Like, you don't have to pull a Tesla and collapse like this. I don't think that's what the S&P does. Instead, I would expect multiple years of this. Just mediocre, volatile markets, sideways a lot. That's in equities. That's in stocks. The FX land, there will be trends. In stock land, I think it's going to be a lot of false moves, a lot of back and forth. And this is the first one that I'm kind of anticipating. The way I think that this behaves is that we probably put in a low right here with this long lower shadow. And the next bigger move is a move up above this downtrend line. I think this downtrend line has become too obvious in essence. Too many people are trading against it. It's an easy place to just create liquidations. And put to call ratios, which is a gauge of sentiment and how people feel about the markets, is reached record highs. What does that mean? When they load up on put options, there's extreme bearishness. And it makes it less likely that we go down, oddly enough. You might think, well, if the market's crazy bearish, then we'll probably collapse. No, that's not how it works. If they own a ton of puts, then the pain trade is for the market to go up and for those puts to expire. If they own a lot of puts, it creates less selling pressure in stocks, because if you own puts in your portfolio, you're now insured, you're protected, you don't have to panic sell. And so it just creates, it counterintuitively, it creates more upside. There's other factors. The markets digested the Bank of Japan news really well. We're chopping around here after that initial wave down, and I think, again, I suspect, we've talked about that we're in a choppy market here, as shown by the moving averages. I think the break below the moving averages, just like the break above them, was it's insignificant. This is a fake move up. I really suspect this is a fake move down, and that we're coming, and the next bigger move should be to the upside. That's the way that I'm anticipating these things behave here over the next couple of weeks. Now, I could be dead wrong about that, of course, but I don't think I am. I think that's probably where we're headed in equities. Now, what does that mean for other markets? Well, theoretically, that's a risk-on environment. That should be good for things that are more risk-on, for things like the CAD and the Kiwi and the Aussie. And I'm okay with that. I'm okay with kind of the thought that they could bounce back a bit. But ultimately, longer term, the yen's having a rough week. It's really kind of the only currency that's moved quite a bit. But it's more like the yen spiked 4% and now it's come back, 1.5 basically, given back some of that spike. I don't think that it's just going to quickly give it all away, but it certainly could, and that wouldn't really be that bad a thing, because I think the yen should keep ultimately working its way higher. I think that's the longer term trend, but I wouldn't be shocked if it does anything in the short term, including a little bit more selling or something like that. Last week we talked about you probably want to buy the dips in the yen. That would have worked for that first day, kind of where we were highlighting some spots because it bounced, sharply the next day, but that was it. It's basically kind of pulled back every day since then. So we'll make sense of that a little bit and try to look for the next trade. I didn't really do anything at the end of last week, and I'm not sure in the FX world I'm going to do anything this week either, but getting into the future and following this I would say that the next big move higher in the yen is probably a few weeks away. That kind of makes sense to me that it's probably just choppy. But the next bigger move should be to the upside, in my opinion, in my outlook, frankly. So as we look at crypto, again, some selling pressure, but 2% moves, 1% moves in crypto means it's basically just dead. It's not doing a whole lot of anything. There does seem to be someone underneath the crypto markets, a big buyer there kind of trying to hold prices up or something along those lines. So as you look at the markets, I think it's just kind of a mixed bag. I think we're choppy and sideways. This is international stocks, same thing. I This low should hold, and it's a very nice risk to reward because if I'm right, we could have a good sized upward move for relatively low risk with a stop loss down here. And so I think that's where we're headed. We're going to move up and through the downtrend lines and such, and then longer term, I don't think we're out of the woods, but everybody's kind of gearing up and thinking the first part of next year is going to be really rough. I don't see it that way. I think you actually have a situation where the Fed is more likely to back off or not raise rates as much as expected. We're seeing some inflation numbers come down, but the economy holding up. I would go the other route, and again, this is a change of opinion for me. I really was bearish a few weeks ago at the trend line, which worked out. I suspect we're going to inflict pain, and the max pain point is a move up above those. So that looks exciting to me, looks compelling as a next trading opportunity. Crypto markets, I've long said it. I think you have to be more negative than positive on them, but ultimately, I don't know that you have to do anything. It is choppy, it is sideways. It's more bearish than bullish, but that's not saying a whole lot because trying to trade this, if you tried to buy or tried to sell, you'd have to be pretty quick on the trigger. Everything has been very, very choppy and back and forth for the most part. So look at the list of events. Everything kind of in the yellow, meaning low, low impact to markets. There's just not much out there. We get initial jobless claims on Thursday. That always comes out. Chicago PMI, but again, I don't think this is a week where economics really matter too much. So let's look at a few charts here and try to make sense of things together. If we just go through the yen charts, so this is a daily chart, and you can see the big drop and now the pop back up. Pretty good sized pop in some of these, like the Aussie. The problem is it kind of comes up to the breakdown zone, right? So, do you short it here? Do you buy it here? Let's go to Kiwi yen. Well, if you were saying where was old support looked like it was kind of in this area here, and that's kind of where we've rebounded back up to. Those are Aussie, Kiwi. Let's go to CAD. Where'd you break down from? And where have you bounced up to? So we've recovered, frankly, more than I would have expected. Even within choppiness, I'm surprised there was this much bounce back. Usually that's a little bit of a warning sign. Now again, I didn't really plan to trade much last week or this week in FX. I mentioned this when we met, that I think the markets have kind of mailed it in, and I don't know that I would trust anything that I see. But the first time, here's a mistake that new traders make, in my opinion, that you'll learn not to make. When you're surprised by something, okay, this will happen all the time in trading. Oh, I'm surprised that's as strong as it is. I'm surprised that's as weak as it is. I'm surprised that's bounced back as much as it has. When new traders are surprised, they think it's more of an opportunity. Okay, they think, oh, well, it's bounced even more than I would have expected. Oh, that makes it a better short. So they think that creates more reason for action, right? They become more um, more confident because they're like, well, if it went up even more, then it's an even better short because it has more room to fall. That's the mentality of someone that's new to the markets. They think of it like the higher it is, the more it falls. That's again, that we know that's not true, right? Things that are going up have less room to fall because as they try to fall, there's buyers underneath and so on. It's when things are falling that they're more likely to fall further, right? It's you change your way of thought once you become a more seasoned investor. So surprised that this has gone up. You'll see this all the time when they have a bad trade. They're in a losing position and they become even more confident, right? Oh, I'm surprised it's gone against me, but now I'm even more confident. Why are they more confident? I mean, why would they be? They're in a losing position. They were wrong, and yet they'll tell you they're even more confident. It's really just a mentality that's based incorrectly in the markets, where they think, well, it's gone even higher, it should fall even lower. Oh, this thing, you know, and so it's misguided confidence. On the flip side, a more seasoned trader says, I'm surprised that that has rebounded as much as it has. I have less confidence. I would tell you less confidence. Try to speak and write at the same time. Okay, why am I less confident? Well, because it really shouldn't have rebounded as much as it has. Now you say, well, that creates even more. No, no, no. What I kind of think based on these rallies is that maybe there's more to go, like an ABC or something style correction. Like maybe we get enough rebound to come up to the upper, Bollinger Band or something like that. I have less confidence because I call this painting a picture. We talk about it often. You try to paint, excuse me, try not to cough in your ear. We try to paint a picture of what we're expecting, right? Well, if it's not following the, and it doesn't have to be, it shouldn't be identical to, but it shouldn't be way different than, right? We have to kind of paint a picture, and these have all rebounded. I mean, if you look at this expanded range bearish candle, look at how much they've rebounded. You know, more, they've come up more of that candle than I personally would have expected them to initially have done. Now, maybe it's nothing, maybe it's choppy markets, behavior in a low liquidity environment as we're post Christmas into the new year. There's not a lot of people around. There's some explanations for maybe why it's happening, but I'll tell you, I would just be less confident about shorting these on the bigger bounce. They should have essentially had the little bounce back, like we talked about, and then kind of bled off lower, at least initially, and then maybe gravitate back up. That would be behavior of something that's weaker. Instead, the bigger rebound after this expanded range candle, we really do have to consider, okay, this probably was an exhaustion low rather than a new fresh breakdown. It's probably the end a little bit here for a while, and now we're in an upward phase. And now we're in a correction phase, and frankly, there probably is a little bit more to rebound. So I'm less inclined. Now, I probably wasn't going to do anything anyway, but I think that's a good educational discussion. It's certainly something that will come in handy for you because you should, when you think about how something is behaving, think about your profit and losses. It's really telling. I always tell this story about, you enter a trade and it starts to go profitable and you're up in it, what's weird is you'll get uncomfortable. And something that goes against you and you're down a bit, you'll get more comfortable. Again, this is a new trader that we're talking about. And what's the reason? Why do they feel uncomfortable with a profit and then something goes against them and they feel completely comfortable? Meaning this one they're looking to get out of. They're like, "Oh boy, this and the reason they feel uncomfortable is they feel like they need to do something. They start seeing the boogeyman. They go, well, I'm up, but if I don't take profits, it's going to go against me. It might give away all my profit. It might even turn negative. They start seeing the boogeyman, right? And so when something goes up a little bit, they're so uncomfortable, they're apt to sell way, way too early. This is a very common mistake. Now, it might not be true of every person, right? But we see this often for most individuals. Some people might not have, they might have the exact opposite problem. I don't know, but a lot of people sell their winners way too early because they just feel uncomfortable. They feel like if I don't do this, if I sell it, I get to pat myself on the back and say I made something. Okay, good trade. Even though really it might be causing them big problems, because if you keep taking a small profit, small profit, small profit, these little profits, you're not making much of anything. And then the flip side of that is you hold these losers and you get comfortable and you say, well, let's see if it'll come back for me. Oh, I'm even more confident about this trade now because it's gone against me. It has even more room because I think the target's up here. Well, now that it's come down here, it has even more room to run. No, your target was wrong. Your trade was wrong. This is the one. You got to flip this. You've got to feel more comfortable when you're up and less comfortable when you're down. You have to get that change, right? Less confident. Your confidence should go down in the prospects for this trade. Your confidence level should go down because flat out you're wrong. You're in the wrong position. Your timing was wrong. Your whole thesis might be wrong. There's something that's wrong though. That's why you have a negative right here, right? And over here, you did something right. Your timing was right. Maybe your whole thesis is right. You're doing something right. Your confidence should go up. That's why you have this plus sign right here. That's why you have some profit is because something that you did is working, right? And so, this is psychology. This is changing the way you think, but the way you think and those actions that you take accordingly, it's really important that you can flip-flop that. I'm perfectly fine going with the flow of a trend. I'm perfectly fine um, essentially being kind of on my own of saying most people don't see it this way, but I do. Okay, I feel perfectly comfortable in any of those. But what I try to think about is how the masses are thinking, how the masses are feeling. And, some of the best trades are just going with the trend, but the trend will be so hated. Something will just be going like this and everyone will hate it. And they'll say, this makes no sense. This is so stupid that this is happening. And it's a telltale sign that it has more room to go. Everybody hates it and it's working. You got to love that. Sometimes, the flip side, everybody's so convinced. I kind of talked about that with my market outlook. Everybody's so convinced the market's about to crack that they've loaded up on puts, that they're positioned massively bearish, record level put to call ratio. Those things make it more likely that we go the other way. Those things make it less likely that we'll actually follow the path because too many people are already piled on that side of the boat. So, um, that is a change of opinion for me a little bit on the yen, just from the standpoint of, again, it shouldn't be bouncing as much as it is. So my best guess is you get a little dip, and it's probably an ABC. You know, it's an ABC 1, 2, 3 type of correction that we're in. It probably has room to go. So I got that one, you know, where I certainly was right to avoid shorting the yen. Um, these charts all show the yen has exploded higher over the past couple of months. So if you avoided that, and even better, you were a buyer of the yen, fantastic. You were positioned. You were positioned very well for the Bank of Japan. Anything that surges 4% in your favor, I mean, you got to take some profits, of course. So that made perfect sense. If you weren't in and you were looking for the next trade, it should have given kind of a weak bounce and then had one more kind of push to the downside. The fact that that didn't happen would kind of put in a little bit of an exhaustion low, and there's probably a little more room to go here. That would be my thoughts. Is the Japanese yen correlation to the Japanese 2 and 10 years? So there's a lot of things that drive the Japanese yen. What's happening here in terms of, so central banks can at times try to do things that manipulate their markets. I mean, I don't know if there's no other word for it, but manipulation, right? So go back in time and think about the Bank of England. There's a famous story where George Soros broke the Bank of England. This was many, many years ago. And there's a lot of these stories, right? If we look at the Swiss franc, when it was pegged to the euro and that came undone, okay? That these are all central bank manipulations in the currency markets. And the Bank of Japan has had one essentially ongoing in that they would peg their interest rates to certain levels and not let them freely trade. Okay? So in the US, the Fed tries to influence interest rates by moving Fed funds, and it tends to work. It's not always perfectly correlated. In Japan, they had them pegged. So they were saying, you know, these rates have to stay down here by law and so forth. And in order to kind of create that effect of lower interest rates, more economic activity, and you have to understand Japan has been in a deflationary spiral for decades. I mean, so much so that they have real estate prices that are lower for 30 plus years and still going. I mean, for decades and decades, housing prices, real estate prices have been going down. So it's a whole, you know, thing you can read about. It's history and so forth. What with all the other rates around the world going up, okay, this is true of, you know, the ECB. This is true of the Fed. This is true of the Bank of Canada. This is true of, you know, RBA and RBNZ and just on and on, right? Rates have gone up and their government bond rates have gone up, so on and so forth. But Bank of Japan has been pegged down here. What we've talked about is basically that's a very dangerous game. Specifically, to be short the yen would be extremely dangerous. And this is why a couple of months ago I said, look, when you have pegs and you have central banks mandating and pegging things and everything else is going this way, but this one's pegged down here, that creates a disconnect and it creates a volatile little cocktail of potential volatility. And I would not wish my worst enemy, I don't really have any enemies, but if I had a worst enemy or somebody I didn't like, I'd still not want them to be short the yen. So from the standpoint of, you know, risk and reward, that was kind of the point of pounding the table a little bit is, look, this can come undone. and it started to come undone. I mean, you can already see it was coming unwound before the announcement, and that's kind of how markets work, isn't it? That the you know buy the rumor, sell the news. The final flush here was on the actual news coming out. That was a big 4% spike higher in the yen, but really it had already moved, 5-10% prior to that, hadn't it? And this is true of most every chart. So they've made that shift, they've made that change, but it's still not freely traded. Now they just let it gravitate around 50 basis points, which is a freer dynamic, but still not free. And until they allow more freedom and really undo those, it's probable that these are all going quite a bit lower in the coming year and so forth. So in terms of markets, it's still a peg. Essentially, you still have to be very careful being short, specifically the yen. And my thought is, again, that I would rather, um, play the yen to the upside, which means you short everything against the yen, right? This chart going down is really the yen going up, isn't it? That's the biggest part of this. And all the charts have that. The yen has been rallying. It's pulled back a little bit the past couple of days, but in the coming years, I think the yen still continues to appreciate higher. Maybe the best way to look at that, whoops, I brought up the wrong one. Let me see if I can find it here. This would be a better way to look at it. Where did my chart go? Had it up just a minute ago, but that's okay. Pull it up another way. Let me drag this over. So if we just look at the yen by itself, is probably the best way to do this. So the yen versus these others, again, kind of looking at it, this is the daily chart, right? This is where we put in our bottom a couple of months ago, really, and it's been running. This is the extreme day. Now the yen's come off, and I'm surprised it's come off as much as it has. So my thought is we get a little bit more correction. I'm not more confident in buying the yen right now. My picture would have been a minor give back and then another little push, and then we could see a correction and so on. So I think the correction's already in place. Things need to correct. Corrections are normal. ABC type of moves are perfectly reasonable. And the fact that it's pulling back as deep as it is probably sets that in motion. Sentiment indicators that you use, I mean, you can use different things to kind of get a sense of positioning, right? Overbought, oversold, like RSI down here is an overbought, oversold. So the yen got a little overbought, a little overdone. This is kind of a way of looking at extremes, a little overdone to the downside, a little overdone to the upside. You can look at consumer confidence numbers, a lot of different things, but part of what I do is more just related to paying attention to how I think the market is positioned, and where I think people's heads are at. I always give the analogy of if you went out and let's say you interviewed 10,000 people or something, what do you think the answers are that you'd get back? Right now, at this point in time, if you went out and interviewed 10,000 people and said, you think the stock market's going to have a big up move or a big down move, almost all of them would say down. Right now, down. Pessimistic, down. Stocks, ugly, down. And that's kind of telling, right? If the market makes a big move up and all of a sudden you did the same interview, they'd be like, oh, we probably put in our bottom. Well, up. And that's probably where we'll go down. So when you think about sentiment, usually sentiment is not something that changes overnight. It's not like sentiment one day to the very next day would be a major shift. It's kind of a progressive thing. People get more and more negative. They weren't negative at the start of 2022. They're negative now at the end of 2022, right? At the start of 2022, they were positive and stocks were up and they were buying Bitcoin and this and that and taking risk and so on. And now they've been beaten senseless. Now they hate markets, right? And so it's a little different mentality at this point. So good stuff. Yes, you are all my friends. As I said, I mean, I might be the only human out there. I don't know. I literally don't, I can't think of anyone that I dislike. Of course, I'm not a real, I'm not a real controversial figure. I kind of stay out of politics and a lot of different things because I tend to disagree with both sides. I tend to be on the political spectrum. I'm I am literally to the point where I kind of think that it's all a scam. I think that the Democrats and the Republicans, now I'm probably making enemies, but I kind of feel like they have this perfect system where it's like sports teams. If you can get the Philadelphia Eagles to just despise the Dallas Cowboys and the Dallas Cowboys to despise the Philadelphia Eagles, you create this rivalry and it makes people invested and really feel it. And that's kind of how politics are. It doesn't matter so much what they say, they just defend everything from their party because they hate the other side so much. And so it's very much like a sporting event. And it's a great little scam that this two-party system has because nobody else can come in with ideas and really compete and so on and so forth. So I kind of think that's what it is. I think we kind of live in a scam where they're both in on it and they're both against each other. Now everyone hates me because you're probably Republican or Democrat. I don't know, but that's kind of where I am on the political spectrum. So I don't even get into debates and things like that. I just feel like, oh, I'll stay out of all of that. So let's come back and take a look at what we have for the rest of this week here. Not much, of course. We are on holiday to a certain extent, but we'll have a currency recap that'll come out tomorrow. And then, as always, we'll have the trading room and different things that way. So thanks again, everyone, for being here. Have a great rest of your day. Have a great new year coming up. And we'll see you next week. Same time, same place. Goodbye, everyone.